Stocks suffered a second down week. As you can see here on the chart of the 2-year chart of the NASDAQ, more bad economic news. And then the Fed signaled more rate hikes in 2023, and the market didn't like it. So you see here the NASDAQ dropped 2.7% for the week, bringing the monthly loss to 6.6%. And it fell further below its 26 or 23.6 Fibonacci retracement line. And if we look at a 1-year daily chart here on the NASDAQ, you can see that it fell below. We identified support at 10,800 last week, and it fell below that as well. And if we look at the S&P 500, it's similar looking chart, a little bit better, but it fell below its support at 3,900 here on this chart. And if we go and we look at its fib chart, 2-year chart, you can see that it's fell below and is basically living below. Now it's 38.2 retracement line. Now only 5 of the 21 ETFs that we trade are, trading up their 200-day moving average. Take a look at them real quick. This is Energy Select, the energy companies. Fell below its the blue line here, which is the 50-day moving average. It's still hanging out above its 200-day line. XLV, pretty big down move there. That was looking like it wanted to go back and make a new 52-week high, but it headed south real quick. XLI is industrials, and that looks like it's headed back down as well. So we're pretty much looking pretty weak here. And there was, aerospace and defense made a new 52-week high here on this bar, and now it's headed back lower. And we did have a position earlier in SLV, but we got stopped out on that one, and we would get back in at 22. So basically, that's how it looks. So the market has got some work to do. Well, since we're making our money shorting the market, I wanted to go over how we do that. We've got this dark gray area here is the trading before the market opens. That's the market trading during the day, and then that's after the close. So what we do is we use the MACD with the fast period being 6 periods, and we use a 5-minute chart. So each bar is 5 minutes. So the 6-bar average, when it crosses over the 20-bar average, okay, it triggers our buy point. And that's very simply, and also our sell point. Okay, so here we're looking at the market action, and it's going down. And you can see right before the market opened, this indicates that, in all likelihood, because there's a negative cross, if you will, the blue line crossing under the red line indicates that the market's likely to go down which means the NASDAQ's going up. So the SQQQ, which is the inverse, that we're looking to trade because the market is in correction. And that's exactly what happened. It goes down here, and then it reverses. And when the blue line crosses over the red line, our model bought 1,000 shares at the pivot point, what I identified before the market opened at 49.50. So that's what we did. And we had a limit order out there, and we just executed the order and got filled. So then it meanders around down here, but I'm looking because we're already at break even. So I'm looking to hold this as long as I can towards the end of the day. But although it went down below a couple of times, I didn't really get excited early on, and I just stayed in until this bar right here as we're getting close to the end of the day. I was wanting it to go back up here, and so that I could maybe hold it through the end of the day and close out near 5110 that you see over here. But that didn't work out. So when it crossed under here, I waited for this volume to pick up, or the big down volume. And so I got stopped out at 50.30 for a gain of 800. So that's basically how we trade the shorts. We do it on the MACD, moving average, whatever it is, convergence divergence indicator. Okay, a lot of malarkey about, and the green bar here is the 10 period. It's the histogram. It just indicates, hey, it's trading above its 10 period average and it's trading below. That's all that does. I really don't pay any attention to that very much, although I do watch it as these bars goes up. That usually indicates that the market's running out of gas. Okay, but you could see here until it started really picking up volume on the downside, I wasn't concerned with getting out. Okay, let's take a look at how we've done. You can see that 1% drop pretty much across the board on Friday, and we've made 6.4% so far this month, 148%. Of course, we're crushing our benchmark S&P by 167 percentage points, and we're beating the NASDAQ by 107, almost 180. All right, I want to take a look at the heat map. This is a weekly heat map of the S&P 500 stocks, and you can see the big Tesla's down 16%, Netflix down 9.2%, and Apple, which is not down as much, but Apple moves the market, and Apple was down 5.4%. So guess what? We got a down market. Well, that's all I have for this week. I'm Greg Gallagher. Good luck and good trading.